I talked about the triple tap in the past, and in this video I want to dedicate a full video just for a triple tap strategy, and I've included a trade tutorial. So let's get into the charts. Whenever I pull up a chart, I ask myself, is the trend likely to continue, to end, or to reverse? And then I try to find confluence factors and to just look at what is going on here. And first you can ask yourself, how strong is the price able to push lower? Obviously we are in a downtrend, and when we just look at the lows, you can see the market is able to push lower into a lower low. But another thing we can see is that each of those boxes, the distance from one low to the next, seems to be shrinking. So that is not a good signal for a downtrend. So if you're in a short trade, you want to be very cautious here because the market is losing momentum. Then we can add an RSI, but you can use any momentum indicator such as the MACD or the stochastic. And you will see that if the market and if the lows are getting smaller and smaller and the distance from one low to the next is shrinking, you will also often or usually see a divergence. And that is what we see here. The RSI is making a higher low, whereas the price action is making a lower low. So it's a confirmation that something's changing. And this is what we would refer to as the triple tap. It is 3 consecutive lows, 1 low, 2 lows, 3 lows, and the distance or the size from one low to the next is shrinking. So something is going on here, and the triple tap is often pointing towards the potential end of a trend. So at least the triple tap could be used as an exit signal if you're short. And then we can take this one step further and see, is a trend rolling over? Sometimes a downtrend will lead to an uptrend. Not always, but sometimes. So let's see what we have here. We add the 50 SMA to our chart. It's a good trend filter tool. As long as the market is below the SMA, we are in a downtrend. So we also have a flip zone. Previous support turned into resistance, and it's right at the cluster here. We also add our daily pivot points. In a downtrend, you want to see that the price is below the daily pivot point. As long as this is the case, we don't even have to worry about should we go long, because that's out of the question. If the market is below the daily pivot point, don't even think about going long. And so we have a very interesting cluster here. We have the pivot, the moving average, and also our flip zone. And as long as the market is not able to get above this, we have no business in being long. On the other hand, we can also use this as a trading plan. If the market can get above this cluster, we probably can think about going long. So now what you can see is the market breaks 2 out of the 3. It's breaking the flip zone and it's breaking the moving average, but not the daily pivot. Shortly after, on the next day, we get a new daily pivot, and you can see the market is now above the pivot. So now the market is above the pivot, above the flip zone, above the moving average. So now we are looking at a potential long opportunity. As long as this is given, you could think about theoretically getting into a long position. I just recently made a video about stop runs, liquidity runs, and if you are in a long position, be very careful of where you put your stop loss. Or if you get taken out, if you have your stop loss somewhere in this liquidity pocket, then you could use this as a secondary entry signal. So it's not always bad to take the breakout trade, but if you get taken out by a liquidity run, make sure that you understand how to get back into a trade and understand that a liquidity run can also help you find re-entry trades. In this example, the market just keeps trading higher. And here we have our first retest. We didn't have a first pullback after the breakout. We have our first retest here. As long as the pivot is holding and as long as the market is not trading below the pivot, it is a strong bullish signal. So in this example, you could think about adding to a short or buy trade if the market can break above the highs, because it confirms that we are able to stay above the pivot, which it did here. You can see the market moved higher. But afterwards, something is changing. The market is making lower highs. It is trading into the pivot repeatedly, which is not always a good signal. And now, just on the next day, we are suddenly below the pivot and we are below the moving average. So with the daily reset of the pivot, the situation has changed completely and we are now trading below the pivot. So the market is trying to break above the pivot and rejecting it. Those are very, very important signals, especially if they happen in the right context. The right context being the market already trading higher for a long time, we're having lower highs, we are trading from underneath into it and then rejecting it. So those are very, very bearish signals. And you could also identify another support and resistance cluster. So a trading plan could be, if you get below this area, you look for shorts because everything is nicely pointing here towards a bearish momentum. And here's now the breakout out of this cluster area. We have a retest of the moving average, which also happened here right after the breakout, and a continuation. And you can nicely see during a downtrend, it's very common to see those retest patterns. The market trades into a pivot, rejects it, trades into it, rejects it, here as well on the upside. So a really interesting study, I think, here that you can use to enhance your triple tap information. So we start with a triple tap, and then we slowly build other confluence factors on top of that. Let me know in the video comments if you enjoy those types of videos, and I may consider making more of them.